Hi everyone, welcome to the channel. Today our focus is going to be on the company Alphabet, ticker GOOGL. We all have used their products like Google Search and YouTube where we are right now. And these are by far two of the most popular websites in the world, among other products and services the company offers. In this video, we'll look at Alphabet's financials, perform a stock valuation, and at the end of the video, we'll go into computer modeling the forecast 52-week stock movement. But first, I'll provide an update on my portfolio's performance. So let's jump right into it. Here are my recent purchases into Alphabet. We can see just made it on February 20th at around $140. Now, I do know late last year the stock was trading much less, under $100. And I did look at buying into it, but I was being a little greedy, thinking the stock price would dip even lower, which never did. It actually turned around along with the overall market. So I missed out on that opportunity, but I'm getting into it now. And down below, you can see the total summary. So far I put in just over $6,000 into the stock, and currently just under a 1% gain for the day. But let's go over and look at the total portfolio. Here's my portfolio's performance for the day, February 20th. So overall, it is a down day, down about $8,000. But we can see the Alphabet investment down in the lower right. That is up, like we mentioned, about 0.7%. But compared to some of my other investments, it is on the smaller side. So maybe over the coming weeks, coming months, I will see about adding into this position and see how it grows with the stock price. But let's jump over and look at the total returns. And then we can see the total returns for the portfolio. And again, Google would be down in that lower right. It's a small position, so it's not showing the ticker there. I would need to hover over it like I did for the daily returns. But let's move on now, and we will look at their financials. So looking at their financials, first dividends, we see Alphabet doesn't pay any dividends, so we're going to jump right over then to shares. And since 2018, they've been buying back shares, bringing down that outstanding share count. And over the last 10 years, they bought back about 7.5% of their shares. And moving forward, sounds like management is going to continue focusing on these share buybacks. So a great sign here for Alphabet, and definitely a check. Revenue and revenue per share. And we can see both of these over the last 10 years been growing nice and steady growth. This is what we really want to see in companies. And for their revenue, it has grown more than 365%, while on a per share basis, it's grown over 400%. Helped with those recent share buybacks. And again, definitely a positive sign and a check. The net income and earnings per share having similar trends, which is not uncommon. And though they did have two down years in 2017 and 2022, we can see 2023 is up 23% for net income and earnings per share up 27%. So good signs here, up overall. Net income up over 420% over these 10 years, and earnings per share up more than 460%. So great data points here, and definitely a positive sign for check marks. Free cash flow and on a per share basis as well. Great growth over the past 10 years. Free cash flow up 475%, while on that per share basis up 520%. Again, helped by those share buybacks. So obviously, Alphabet can make money. We're seeing it here. And this is what we want to see as investors. Positive signs for net income, earnings per share, free cash flow, and revenue like we saw a few minutes ago. So great signs so far all around. Now moving on to book value, we can see growing over the past 10 years as well, up almost 200%. So another good sign here. Return on invested capital, I like seeing companies 10% or higher. We can see Alphabet's well above that, typically above 14%. Yes, they had that one down year in 2017, but besides from that, everything's well over 10%, and really over the past 3 years, over 20%. So a great sign here for the company. Profit margins, I like seeing over 10%. Obviously, Alphabet's in that software industry, which typically has higher margins, and we could see that here above 20%. Yes, same thing. 2017 was slightly down, but besides from that, great sign here, over 20% for net profit margin. Long-term debt to free cash flow, I like seeing this under 3. We can see here Alphabet's well under that, well under 1. So again, great data point. They can pay off that debt with no issues. So for the financials, everything's in the positive. Growing revenue, growing net income, earnings per share, free cash flow, everything's looking good. Even down here for these other data points, book value per share going up, return on invested capital, net profit margin, long-term debt, everything where I like to see in a company. Looking at some financial ratios, we'll look at the PE first. And the red line just represents where it's currently trading at just under 26. We can see through Alphabet's past 10 years, it's typically traded above this in that higher 20. You can even see 30 and even 40 range at times. Though the last 2 years, 2022 and 2023, have been lower, but still, it's trading below where it normally is historically. And I do know these high tech companies usually trade in the higher 20 range at least. So I'm going to look at this as being an opportunity based on their PE, and we're going to give that a check. And in price to sales, looks like it typically trades around 6. And we can see based on their recent earnings, they're just below that. So I'm going to look at that as a good sign for an opportunity. And then enterprise to free cash flow, it looks like it's typically in that mid 20 range, somewhere around 25. And most recently, just below that, 23.62. So again, I think this is going to be an opportunity based on this ratio. Then enterprise value to sales, typically in that 5 range. We can see currently 5.34. So not showing overvalued on this ratio either. Based on these ratios, nothing appears to be overvalued. If anything, it's about average or just under. So showing some opportunity, but let's look at performing a stock valuation now. So here's the valuation for Alphabet, and we can see the intrinsic value is just over $160, and with a 90% margin of safety, brings it to just under $145. Now the current stock price is trading in that $140 range. And this valuation is based on a 20% short-term growth rate over the next 10 years with a 10% discount rate and a 3% long-term growth rate. Now up here in the top right, we can see the net income CAGR for Alphabet was just over 20% for the last 10 years, and earnings per share was just over 21%. So this is why I'm using a 20% short-term growth rate, because it's basically what they've performed at over the last 10 years. And also I've used 20% for Meta and for Microsoft as well. So this is what I'm comfortable using with these big tech companies. Now, I do know there's discussions about some of these competitors eating into Google's search's market share, particularly ChatGPT. But I've used ChatGPT. I'm sure many of you have used it. I just don't think it's a direct comparison for Google search. Yes, it does have its benefits, but I still see myself using Google search, and also Google's developing their own Gemini AI tool as well. So I just don't see Google losing any market share. And if they do lose anything, I don't think it's going to be significant. But let's just say they do lose some market share and it impacts their growth rate. So let's just take this down a couple of percentage points, and let's just say over the next 10 years, their growth rate is only 18%. So with an 18% short-term growth rate, intrinsic value drops to just over $137. So just below where the stock's currently trading. And with that 90% margin of safety, brings it to just over $123. So even if buying at this point, you can see you're still getting it at a fair value if you believe 18% is more reasonable for a growth rate, though there's no margin of safety. But let's move on now, and we will perform computer modeling to forecast the stock movement for the next 52 weeks. So in the computer modeling software, I already ran the analysis using 2 methods, the M5 rule shown here and random forest. And I already copied and pasted all the results into Excel as it's a little easier to see. But let's look at this data real quick before we jump over to Excel. And this data is as of this previous Monday, February 19th. In the far right-hand column is the weekly average stock price for Alphabet, which we can see just over $141. And the column right next to it is the weekly average for the S&P 500 ETF. And other columns are just other various data points used for the analysis. Now, scrolling down 52 weeks, we can see here the outlook in February 2025 for the M5 rule is showing a nice gain at $165. But let's jump over to Random Forest and take a quick look at that. And same thing, Random Forest data is as of this previous Monday, February 19th. And scrolling down 52 weeks, it's actually showing a stock price to decline, getting down to $123 out in February 2025. Let's go into Excel, look at all this data a little closer. So in Excel, I already pasted all the data from the computer modeling software. And first thing I'll point out is that vertical red line represents this previous Monday, February 19th. And everything to the left of that vertical red line is the historical stock price for Alphabet, and everything to the right is the computer modeling prediction. Now, I'm just showing this data here going back to 2009 so you can see the historical stock price movement for the company. But we're going to jump over to another tab and look at the computer modeling predictions a little closer. The M5 rule showing the stock price increasing, getting up into the $170 range out in around May time period, which would be a gain of just over 20%. But then pulling back a little towards the middle of the year and trading around $160 until February 2025, where it's predicting the stock to be at about $165 for a gain of around 17% at the end of the 52 weeks. Random Forest has shown the stock price to decline throughout the year with a dip in August, falling to about $116 and closing out the 52 weeks slightly higher than that at $123, which would still be a loss of about minus 13% from where we are today. Then taking the average of the M5 rule in random forest, it's showing a relatively flat trading price with that one spike out in May getting above $150 and closing out the 52 weeks in February 2025 at around $144 for a slight gain from where we are today. To recap, I believe a fair value to buy into Alphabet is between $145 and $160, with the low end taking into account a margin of safety. While the current stock price is trading in the low 140 range, and because of this, I recently took a position in Alphabet. Now, I know I missed out on the big stock price last year because I was being a little too greedy, hoping the price would fall even more, but instead, the market and Alphabet turned around and I missed out on my opportunity. But over the coming weeks and months, I'll look at adding into my position. Now, for the computer modeling, the M5 rule is showing a nice gain in the stock price over the next 52 weeks, closing in February 2025 at around $165 for a gain of 17%. While Random Forest is more bearish, with a February 2025 stock price falling to around $123 for a loss of minus 13%. Now, I hope you enjoyed this video and gained some useful information. If so, consider subscribing, and I hope to see you next time. Thanks for watching.